Welcome to the Senior Safety Advice Podcast, your trusted source for expert guidance on aging safely and independently. Whether you're a caregiver, a family member, or a senior looking to stay secure at home and beyond, we've got you covered. From fall prevention and home modifications to financial safety and scam awareness, we provide practical tips to help you or your loved ones live with confidence. Tune in and empower yourself with the knowledge you need to navigate the challenges of aging. Let's make safety simple.
Welcome to today's episode of the Senior Safety Advice Podcast. I'm your host, Robin Schiltz, and today we're discussing a critical topic for anyone planning their future: long-term care insurance, also known as LTCI. As we age, the possibility of needing long-term care becomes a reality for many of us. This type of care can be expensive, and without proper planning, it can deplete savings and assets very quickly. Let's explore what long-term care insurance is, how it works, its benefits, and whether it might be the right choice for you or your loved ones. So first, what is long-term care insurance? It's a specialized policy designed to cover the costs of extended care services that aren't typically covered by traditional health insurance or by Medicare. These services include assistance with activities of daily living, such as bathing, dressing, eating, toileting, transferring, and managing incontinence. It can also cover care for chronic medical conditions or cognitive impairments like Alzheimer's disease. Long-term care insurance provides financial support for care received in various settings: at home, in assisted living facilities, in nursing homes, in daycare, adult daycare centers, and in hospice care. The costs of long-term care can be staggering. For example, home health care aides cost an average of $27 per hour as I'm recording this. Assisted living facilities charge about $4,500 a month depending on where they're located. And nursing homes can cost over $100,000 a year for private rooms. Without long-term care insurance, these expenses could quickly drain your retirement savings or force you to rely on Medicaid, which generally has strict eligibility requirements and limited options for care. Long-term care insurance helps protect your assets while ensuring you receive quality care when needed. There are three main types of long-term care insurance policies. The first is a standalone or traditional long-term care insurance. This is the most straightforward type of policy. It covers a wide range of long-term care services, but does not offer additional benefits like life insurance. The key features are you choose the daily benefit amount, for example, $150 a day, and the benefit period, for example, 3 years or a lifetime. The policies often include an elimination period of somewhere between 30 and 90 days before benefits start, and inflation protection can be added to ensure coverage keeps pace with rising costs. As an example, Catherine purchased a standalone policy with a $200 daily benefit and a 5-year benefit period. After suffering a stroke at age 75, her policy reimbursed her for home care services under the 90-day elimination period. The second type you can get is long-term care riders, which are add-ons to existing life insurance or annuity policies. They allow you to use part of your death benefit to cover long-term care expenses. The key features of these are that the rider reduces the death benefit paid to beneficiaries by the amount used for long-term care, and premiums are generally higher than standalone policies. For example, Frank has a $500,000 life insurance policy with a long-term care rider. He used $250,000 for his long-term care needs and left $250,000 for his heirs. The third type of policy is a linked benefit policy. Also known as a hybrid policy, these policies combine life insurance or annuities with long-term care coverage. The key features are, if you don't use the long-term care benefits during your lifetime, your beneficiaries receive a death benefit. Premiums can be paid up front or over several years. These policies often guarantee some value back, making them appealing for those who dislike the use it or lose it scenarios. For example, Gabby purchased a linked benefit policy at age 56 with a $150,000 death benefit and up to $450,000 in long-term care benefits. If she never needs long-term care, her heirs will receive the full death benefit. So how does long-term care insurance work? To purchase a policy, you fill out an application and answer health-related questions. The insurer may review your medical records or conduct an interview. Once approved, you pay premiums based on factors like age, health status, and coverage options. When you need care, benefits are triggered when you're unable to perform at least 2 activities of daily living or you have cognitive impairments. You may need to pay out-of-pocket expenses during the elimination period before reimbursement begins, and the policy pays up to its daily or lifetime limits. Who should consider long-term care insurance? Because these policies aren't for everyone. So here are some considerations. It makes sense to get one if you have significant assets that you want to protect from being spent on long-term care, if you want more flexibility and choice in your care options compared to relying on Medicaid, and if you're in good health and can lock in lower premiums by purchasing early, typically in your 50s or early 60s. When it might not be worth it is if premiums would strain your budget, if you have limited assets and you would qualify for Medicaid without needing long-term care insurance, or if you're older and have pre-existing conditions that make premiums prohibitively expensive. Premiums vary widely based on factors like age, gender, health status, and coverage options. A healthy 55-year-old male might pay around $800, $950 annually for a basic policy with no inflation protection. A similar policy for a female could cost $1,500 due to their longer life expectancy and higher likelihood of needing care. You should be aware that premiums increase significantly with age. So a couple aged 55 might pay about $5,000 annually for a mid-range policy today, which is about 35% more than they would have paid just a decade ago. This increase is due to rising healthcare costs. Despite its benefits, long-term care insurance has some drawbacks. High costs are number one, and the premiums can increase over time, as we've discussed, which makes policies less affordable for retirees on a fixed income. Policies can be complex and difficult to understand. Details like elimination periods and inflation protection require careful consideration. And they have a low adoption rate. Only about 7 million Americans have long-term care coverage due to its cost and complexity. Also, there's health-based underwriting. Many applicants over the age of 70 are denied coverage due to pre-existing conditions. If a long-term care insurance policy isn't feasible or desirable, there are some alternatives available, the first of which is self-funding, so using your personal savings or investments to cover future care costs. Another option is Medicaid, which is available for low-income individuals, but offers limited options and requires spending down their assets before they qualify. There are hybrid policies, which provide some value even if you don't use long-term care benefits, and there's always family support, which is relying on family members for caregiving. This is common, but can place emotional and financial burdens on your loved ones. So to recap, long-term care insurance can provide peace of mind by protecting your savings and ensuring access to quality care when needed. However, it's not a one-size-fits-all solution. Carefully assess your financial situation, health status, family needs before deciding whether long-term care insurance is right for you. If you're considering purchasing a policy, start early while premiums are lower. Compare different types of policies and riders, and consult with a financial advisor or insurance specialist to find the best fit. Planning ahead is key, whether through long-term care insurance or alternative strategies. to avoid financial stress during what should be your golden years. So thank you for tuning in today. We hope this episode has shed light on the complexities of long-term care insurance and helps you make an informed decision about your future planning. Please share this episode with family or friends who you think would benefit from the information, and stay tuned for our next episode. Until then, take care. Bye.
That's it for today's episode of the Senior Safety Advice Podcast, helping you and your loved ones stay safe, independent, and informed. If you found this episode helpful, be sure to subscribe and share it with others who could benefit. For more expert tips and resources, visit seniorsafetyadvice.com. And remember, staying safe starts with staying informed. Until next time, take care and stay safe.